Welcome to Global Risk Community Chat. Today, our guest is Miko Matsumura. I'm very happy to have you here today, Miko. Welcome.
Yeah, thank you very much.
Yes, thank you very much for joining us. So before we jump right into the topic, can you briefly introduce yourself to our audience?
Yeah, absolutely. So I'm a general partner with a venture capital firm called Gumi Cryptos Capital. Our fund one actually is in the top 1% of venture capital firms by performance. We did achieve about a 25x asset appreciation over the 4-year course of our fund one. So, we definitely have a very healthy fund. We focus exclusively on blockchain startups. So we definitely do build unicorn-sized companies like OpenSea or like Yield Guild Gaming or Celsius Network or 1inch. So there's a number of projects we've worked on that have achieved big size. So that's my worldview.
Yeah, that sounds quite exciting. A lot of also, I assume, a lot of diversity or things that you tackle with. So with that being said, let's then jump into the topic. What would you like to share with us today?
Yeah, absolutely. So, I know the audience is interested in governance, risk, and compliance. And I think the topic of blockchain-based assets is very much hot in the press. I think that, there is a executive order from the Biden administration to really look into the regulatory dimension around this asset class. And there are a variety of opinions that are, really concerns especially concerns related to things like AML. Obviously the question becomes, sort of global risk and really understanding risk, both to the organization as well as to sort of macroeconomic risk, right? So I think that there's a couple of really interesting ways to look at it in the current geopolitical arena. But I think, to me, what I would love to do is talk about, some of the use cases for this asset class, and then try to unpack kind of the risk aspects of these issues.
Yeah, that actually sounds like a good idea, and maybe we can then jump into it because I, of course, heard that you mentioned the Biden administration, but also the global aspect of it. So maybe we can start with a case study within maybe US and then go more into the global tackling.
Absolutely. So, I think there are one of the recent pieces of legislation that nearly passed in the EU was actually a potential ban on cryptocurrencies that use proof of work mining. The proof of work mining system is actually the system that basically causes cryptocurrencies to consume electricity, right? So if you think about it from a global geopolitical perspective, one of the things that's very, very complex is the tie between economies and energy, right? So when you look at things like the relationship between the United States and countries like Saudi Arabia, these relationships are based on effectively the dollar as being used as a demand currency for energy, right? So when you look at the petrochemical economy, what's happened is that there's a tie between sort of the base layer currency and effectively it being used as a demand currency for energy, right? So, what we've seen in the global macro economy, of course, is that we're seeing kind of this very strong uh, sort of challenge to the global economic order as well as the international order of international law, in the form of the conflict in the Ukraine, right? So obviously we have, sort of a military aggression, and we have kind of an unprecedented source of humanitarian suffering as well, right? And a lot of this tends to be tied to things like energy supplies, right? So there's a strong connection. Now, when you look into the cryptocurrencies, they're within proof of work currencies, currently Bitcoin and Ethereum, you do have a tie between actual electricity consumption as well as the asset value itself. So the asset value of Bitcoin is effectively protected by this proof of work. And the proof of work means it's the work done by computers. And the way the computers work is they burn electricity in order to create almost a postage system. So just to make it very simple, the idea becomes if you have a system of messages, you imagine that you're sending people letters, right? Now, if you put postage on the letters, like 50 cents, right, then the ability for an attacker to spam the network with an infinite number of envelopes actually decreases, right? Because you've put postage onto this envelope, right? So basically, the idea of Bitcoin is very similar, which is Bitcoin basically forces envelope senders to produce work, and the work they produce is basically solving difficult mathematical problems.
Yeah.
And so people say that Bitcoin wastes electricity, but what it's really doing is it's proving work in order to make attacking the network more expensive, right? So that's the way Bitcoin works. So the reason why I think this is important to understand is I think it's not cryptocurrencies that produce electrical bills, it's actually proof of work. And what's happening now is the number two cryptocurrency, Ethereum, is actually moving from proof of work to something called proof of stake. And what that will result in is a 99.5% drop in the electricity consumption of Ethereum. So the number two cryptocurrency will actually radically decrease in the energy consumption. This is targeted to happen sometime this summer.
Yeah, actually, that's very interesting aspect to look at because I usually, when I hear of blockchain, of course, you hear a lot of more risks involved with maybe the finance side and whatnot. But what I'm hearing a lot is more the ESG, so the environmental, social governance part
Yeah,
of
so there is ESG
impact as
risk.
well. Yeah.
I definitely want to kind of go also to things like financial risk, right? So I think that there's the individual corporate risk as well as the geopolitical risks, right? And then I think there's systemic risks. So I would say that if you look at the risks at the macro level, right, obviously one of the risks that people worry about is things like pseudonymity or anonymity
Yeah.
that provides potentially a cover for potentially money laundering activity, things like terrorist financing activity. Now, I think to characterize it properly, the scale of this is not large, right? And I think when we talk about it from the perspective of geopolitics, one of the concerns that's been raised around Russian territorial aggression has been sanction avoidance, right? So the question becomes, are cryptocurrencies being used to avoid sanctions? I think one of the things that's very important to understand is the absolute magnitude of this scale of the industry, right? So the industry of cryptocurrency is actually not very large from a global perspective, right? So the total asset value of all cryptocurrencies is, currently I think it's in the range of 1.7 trillion dollars, maybe a little less right now. But I would say that like when you look at that scale, it means that there's no real way for central banks to significantly, these are very small systems relative to the scale of global finance, right? So I think that sanctions avoidance, the other thing that I think is super important to understand is that the boundary between fiat currencies, for example, like the ruble, the US dollar, renminbi, these are all gated through KYC. So in other words, if you want to sell Bitcoin and get dollars, you are going to have to go through KYC or know your customer laws, and you'll have to produce government ID, right? So if you want to buy with dollars, you're going to have to go to an exchange, and all the exchanges are basically regulated under FinCEN, FATF, and other KYC requirements.
Yeah. So yeah, that's also I think a big aspect of it. But we are running a little bit out of time, so I kind of want to ask one question that we usually ask in our podcast, and that is, hearing all these, there's a lot of aspects I think to think about, or like things to look into. But if you could maybe share one takeaway point where our viewers can also focus on in terms of blockchain or the risks involved, or like the opportunities as well, what would that be?
Yeah, so I think one of the elements of the Biden executive order is about the defense of innovation, innovation and technology advancement, right? So I think that there is a tremendous innovation in what's called decentralized finance, right? And what's happening that's so interesting is that decentralized finance is about trusting rule-based systems, and the rules are basically run by computers, right? And the question is really about trust in institutions, and the decline in institutional trust is now being kind of mirrored by a trust in algorithms and a trust in consensus, a trust in computer adjudicated rule-based systems, right? So what's happening, I think, in decentralized finance is actually quite exciting, because I think the thing to understand is that financial systems are known to collapse. So large centralized systems collapse, and the result of that is actually catastrophic, right? Simply because the things that are failing are too big to fail, and the consequences of them failing are absolutely epic, and they're known to fail. So that's very problematic. Now, what I'm proposing is not that decentralized systems are not able to fail. Decentralized systems are also known to fail, but the consequences of smaller systems failing is lower consequence, right? So the idea becomes that you have systems like in decentralized or distributed computing, like if you look at the way Google works, Google has billions of pieces of hardware, and at any given time, hard drives of storage are failing inside of the Google Cloud. But Google is technologically designed so that the failures of those hard drives do not cause any catastrophic problem, right? So in a sense, that's the promise of a decentralized finance, which is that you can have thousands of failures, but that those failures don't result in a systemic failure at scale. And that's the thing, Lehman Brothers in 2008 is really the kind of like global systemic failure that we're all concerned about.
That's actually, I think, a very good summary as well, or like I think gives a very good understanding also of what decentralized systems can do, or the environments can do too. So with that being said, unfortunately, we run out of our time for today.
Yeah, no problem.
I want to thank you so much once again for joining us today and sharing your insights with us today. And yeah, thank you.
Appreciate it. Thanks very much.
Have a great day.
You too.